I don't want or need life insurance. Can I still do infinite banking? Well, this particular question doesn't really come up all that often, but similar questions do, such as I don't like life insurance. I think life insurance is a ripoff, or I don't understand life insurance and I've heard bad things about it. But the last part of the questions, or rather statements, is can I still do infinite banking? So in this video, I'm going to address all of those thoughts and questions. Aloha, I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy. And I'm the managing director of the Hawaii Financial Freethinkers Academy, a nonprofit financial literacy education organization. For the past several years now, I've focused on and specialized in the infinite banking concept and developing the tax-free cash growth warehouse strategy. So if you find this to be helpful, please like this video and subscribe to this channel. Also, please post your questions and comments here, and you might want to share this video or this channel with your friends and family members as well. Okay, I don't want or need life insurance. Can I still do infinite banking? You know, my response to that kind of a question is, so if you don't like boats or rafts and you can't swim, but you really want to get to the other side of this mile-wide lake, what are you going to do? And that's really not a perfect analogy, because you could get to the other side by driving around the lake, maybe flying over it, but there are no other vehicles other than whole life insurance that provide the critical advantages that make infinite banking the incredible financial tool that it is. Now, savings accounts don't, none of them do. CDs don't, IRAs don't, mutual funds don't. Credit accounts, including lines of credit, such as personal lines or home equity lines, they don't either. Some accounts offer one or two of the advantages we count on for infinite banking, but no other financial vehicle provide all the benefits and advantages that whole life insurance does. And particularly participating whole life with a mutual company that is designed specifically for maximum cash availability and growth. So the question becomes, do you want to utilize the most powerful finance strategy in history, or just some flimsy facsimile? You may not want or need life insurance, but it's a good thing to have in any case, and it's the only vehicle that really facilitates infinite banking. You see, infinite banking relies on the tax-advantaged, guaranteed, compounding growth of the cash value of a properly designed, participating whole life policy. These policies not only guarantee high compounding cash value growth with dividend interest, but the cash value is guaranteed, protected against any attachment. The cash value also grows tax-free and offers liquid access by means of policy loans. And with the right insurance provider, the loan interest rate is lower than the dividend interest rate that is being paid to your policy cash value. And your cash value continues to grow with the high compounding dividend interest, even when it is leveraged with policy loans. And unlike with any other account, even if you can borrow from those accounts, when you do, that money stops earning any interest, and you are required to repay the loans on a schedule and a rate that the account administrator dictates. Now, whereas with policy loans, which is really the mechanism of infinite banking, you are not locked into a repayment schedule. You determine how often and how much you will repay the loans. And while the insurance provider does charge interest on the policy loans, again, when your policy is with the right provider, the interest charge is less than the dividend interest being paid to your account. And it's simple interest. So you have a huge financial advantage with policy loans. And here's another thing to consider. Most of the mutual insurance companies have been in business for over 100 years. So their track record and stability as financial institutions are among the highest rated of all businesses. That fact alone should provide a good deal of comfort in knowing that your money is in a safe place and you can count on the guarantees offered by them. Now, in fact, the two insurance providers that we use the most here at FSIC are over 165 years in business. And their business acumen has been proven by the fact that even during the last few economic downturns, the recessions of the 90s and 2000s, those providers experienced some of their most profitable years ever. And as a result, they increased the dividends they paid to their participating policies. Now let's talk about the asset that whole life insurance is. Because whole life insurance, especially participating whole life, properly designed with a mutual company, as we've been discussing, is much more than just a funding vehicle and a financial death benefit. While life insurance is not an investment in the strict sense of the word, it most certainly is a growth asset. When you purchase a whole life policy, as soon as the first premium is paid, the insurance provider is obligated to pay out the entire death benefit to your beneficiary. And that means that, let's say if a policy is $1 million policy, as soon as you pay the first premium, which may be as little as $1,000, for example, if you should die the very next day, that policy will pay $1 million to your beneficiary. That's 1,000% return on your money. Okay, never mind that. Typically, in about 12 years, the cash value in your policy will exceed the total amount of premiums paid into it. And from then on, basically, the life insurance is a free bonus that comes with the high compounding interest earning savings that is the cash value of the policy. And as I've described, policy loans are virtually free, while your cash value account is earning more than the loans are costing. In addition, any point in the life of your policy, you can surrender the policy and take your cash value. Of course, at that point, you will need to pay tax on the gains you've earned in the policy, but that's no different than with any account that offers tax-deferred growth, except with whole life, because it is not a retirement qualified account. Even if you are less than 59 and a half years of age, when you surrender the policy, you will not be hit with the 10% IRS penalty for early withdrawal. Also, for the same reason, it is not a qualified retirement account. You will not be required to take the minimum required distributions from the account when you get to be 70 and a half years of age. There's even an option to sell or assign your policy to an institution that will pay you a large percent of the actual death benefit of the policy. That way, you could get more than the cash value in your policy and be done with it and walk away with a good chunk of cash. So, while you may not like, want, or need life insurance, it's a fabulous asset to own, and it is the only vehicle that provides all the advantages that make infinite banking the most powerful finance strategy in history. Now, if you found this to be helpful, please like this video, subscribe to this channel, and share it with your family and friends. Also, please post your questions and comments here. You have questions? We have answers. For a more complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is in the description box below. The link to buy my books on Amazon.com is also below. If you'd like to book a free phone consultation with me, the link to my Calendly page is also below. If you'd like to apply to become a client of ours, the link to the application is also below. We're here to help, and we look forward to helping you. Aloha and mahalo for watching.